Today we're going to take a look at car payments, how they may be breaking your nest egg for retirement. So we're going to take a look at this subject here. The car cost continues to go up year after year, and people are taking out longer payments. They're paying more for cars. So you may have a reason that you're wanting to try to reduce some of your expenses, and what you're paying for your car may be just that place where you can turn some of that money around. Now, just about everybody needs a car in this age, especially here in the United States. There are a few areas where if you live in a central city where you could possibly use a bus, but because of commute times and kids and family situations, everybody needs a car. So we're going to first just take a look at some reasons why you may want to take a look at your expenses on your car and ways to save money. So you may be looking for a way to save money from your car expenses to pay off a debt. Maybe you've credit card debt, student loan debt, things along those areas, and you want to use the savings from a car payment. Maybe you want to save and buy a house, and you're spending $600 a month for a car or $500 per month, and you want to eliminate that and turn that into a positive thing for a house. Maybe you want to save money for retirement, college education, or even emergency fund. If you haven't set up an emergency fund, you want to get that started as quickly as possible. So we're going to look at some ways that we can free up some money from your car expense. Now let's just talk about car expense here for just a moment. Car cost here. The average car cost on a monthly payment for, say, a 5-year loan is about $530 a month. Okay, that's for a new car. For a used car, it comes out to about $381. Now, if you're buying a car, say, every 6 or 7 years, you're going with a 5-year loan, and you're 30 years old, that's going to amount to about $38,000 every 6 years, and over 30 years, that's going to be $228,000 you're putting into a car. So we're going to look at ways of reducing some of those expenses. So again, you can put it into your retirement, college education, a home, or something else. Or maybe you want to buy cash for a car, so you want to save some money. And keep in mind, these numbers do not include maintenance. That could be $200 to $300 more per month for gas, maintenance, insurance, and things along those lines. So we're going to discover some of those areas here today in saving money. Now, you may live in an area where you just don't need a car, okay? And you could totally eliminate that car expense, that monthly payment, if, so let's say you don't commute. You don't commute to work. If you don't have children, you're not going to have to run after your children after school. You could possibly qualify for no car. Maybe you have a poor driving record. Insurance cost is going to be prohibitive. Now, there are some city ride sharing, like your Uber and Lyft, things like that. If you live in a major city like Chicago, LA, Miami, New York, DC, San Diego, that's areas where it's been determined that you could actually travel using those ride-sharing methods less than owning a car. So we're going to take a look at some ideas here today. I want to thank you for joining us here. My name is Richard with Wisdom Investor. Our goal here is to help you accumulate a nest egg for retirement. Now let's take a look at some of the average numbers here on loan amount and what people are paying. Now your situation, of course, is going to be unique to your situation. By the way, if you have any questions about your own particular situation on a car, what you do, leave us a comment and we'd be glad to answer the questions on that. If you like any part of this video when you finish, leave the thumbs up. So I want to thank you for joining us here today. So here's the average monthly payment. Now this is as of third quarter 2008. New cars, $530, used cars, $381. The average loan amount's $30,000 for new, $19,000 for used. Interest rate 5.73% for new. Typically, those that are getting used cars have a higher interest rate, and typically that's because they have a lower credit score. So, and then we're seeing a trend nowadays where people are taking out longer loans on their car payments, extending the amount of money and the interest that they're paying. Now, one of the things that dictates the cost of a car on a monthly payment is your credit score. Here's a breakdown here. Somebody who has a super prime, super good credit score, 781 to 850, the average payment's $504 for a new car. Now, if we go down the scale, say their credit rating is 501 to 600, they're going to pay about $50 more per month. So one of the first areas here that we can do to try to improve our car payment, how much we're paying for a car, try to reduce some of our cost, is work on your credit score. Now, it can take 6 months to a year to kind of rebalance your credit score, and it can take maybe a year to 2 years to try to get that credit score up higher. But if you go in and clean up your credit history, you can start qualifying for a lower cost mortgage or car payment. Let's take another look at an example here. Okay, let's take a look at an example on a $20,000 car loan. This is a used car with an interest rate of 9%. So here we have a $20,000 loan, 9%. We have two scenarios. One, we're going to take this loan out for 36 months, or two, we're going to do a 60-month loan. The payment on a 30-month loan is going to be a little bit more, and our total interest on this is going to be $2,896. We're going to pay $636 per month. Now on the 60-month, we're going to drag it out longer. We will have a lower payment, but look at this interest. We've spent over $2,000 more in interest by dragging this loan out. So the second area that we really want to take a look at is try to get those loans as short as possible. Now, I know we've said earlier, a lot of folks have to have a car, and most people aren't going to be able to pay cash of $20,000, $30,000 for a car. So you've got to get some kind of a payment. I understand that. Now, if you can, there are some other strategies you can use without a payment, and we'll take a look at that in a moment. But if you just got to do it, you want to get that loan term as short as possible and start saving on this interest. $2,000 over 3 years, if you do that several times in your car paying history, you're going to take that difference and save that. That's going to be money in your pocket. Okay, let's take a look at this example here. Payment of $375 for two different people. Here's our payment amount, $375. The loan amount here is a case $12,500. So the person that bought the car, maybe either they paid money down the car or they bought a car of lower value here. Interest rate was 4.5% over 36 months. Total interest paid $886. Now, a person that bought an $18,000 car had 8.8% interest, did it over 60 months, paid $4,315. That's $3,429. If you take that money and invest it over a period of time, that is going to be accumulation for you, not only for retirement, maybe buying a house or college education, whatever you want to use it for. Now let's break this down just a little bit. Our first goal here is if you're in a position where you're trying to save money, then we want to spend less on a car. Okay, we're not going to be buying a $25,000 car. So that's the first area you're going to look at here, is buying a car with a lower value. Okay, you can get a $5,000 car and still do quite well. I'll tell you about a story on that in just a moment. Also, you want to get that lower interest rate. Get your credit in good situation, good status where you can qualify for a lower interest rate. And then thirdly, only go out 3 years on your car loan. You're going to spend a lot less interest on this versus going out 60 months. Yes, 60 months gives you a lower payment, but you're paying more for interest. And if you're watching this video here today, you're looking for ways of saving money. So these are the three primary areas to look at here. Okay, we're going to look at the ultimate plan here on saving money on your cars. And we're going to talk about that here. Again, our goal here, those that are watching this video are looking for ways of reducing their car expenses so that they can roll that over into the retirement, college education, buying a home, whatever you want to do. So here's our ultimate goals here. Okay, first thing. Again, we're looking for ways to save money here. The first thing is to pay cash. Okay, pay cash. And primarily on a used car. I'll give an example here. Now, I've bought several used cars. One of my daughters bought a car. She's looking to get her own car, and I was pushing her to get her own car. So she went out and bought a car. I think it cost $6,000. She actually had saved her money. She put down $5,000, and that left her about a $1,500 payment. So she ended up paying like $100 a month. She's in college. And so she's working and going to college. She's saved her money. She's not stuck with a big payment. She can do $100 per month. She may do that for a year or two and then just pay it off. So she's working on getting her credit established. So that's an example. Now there's many other examples. I'll give you another example. One of my other daughters, we were looking for a car for her. We ended up buying a Buick Century. It's a 2000, and so it was 17 years old at the time. Well, it cost $2,000. We put $2,000 into it just around the axles, and so just to beef them up. The car was driving fine. And so it turned out she didn't keep the car. She ended up getting something else, so I kept it. Okay, I had used this concept here, drive until it dies, on some of my other cars. I had a Ford Bronco 2 that I kept bought it in 1990. I had it for 20 some years, and it was still great. Took good care of it. We bought a 94 Honda Passport, still had it, and we drove those things. I just recently sold those, but we drove those things forever. Okay, again, our goal here is to save money. Okay, so we use the concept of drive until it dies. Now, remember what we said a minute ago, used car monthly payments about $380. Okay, so if you have a used car and the expenses for that used car are running over $250, $300, okay, yes, it's time to chuck it. Again, get a mechanic to check this used car out here, and then on the concept of drive until it dies. If you're spending less than $300 a month on repairs, and that's a lot. Typically, the way it goes is something breaks down, it's $500 every 5 or 6 months, or maybe once a year. So those are some ideas here. The other thing to think of on your car budget: only 10 to 15% of your take-home pay. If you're making $2,000 per month, that's $250 per month, and that doesn't even really include gas or other expenses, insurance. So keep that budget for the car down to 10 to 15% of your take home. And then if you're going to buy a new car, think of this, and there's 4 times the price of the car. You really want to have cash in the bank. If you're going to go buy a new car, you want to be in financial condition where you've already got money in the bank. So my rule of thumb is 4 times the value of the car. So here's a situation: $20,000 for the car. Take times 4, that's $80,000 in the bank. Again, remember, folks watching this are looking for ways to save money. Now, I know it's a lot easier to go buy a new car, but if you're financially strapped, you have credit situations, you have credit card bills, we're trying to save money. So if you're going to go buy a new car, make sure you've got the money in the bank so that you're already in fairly good financial condition. So those are our ultimate answers to this question. Buy used, get it checked out, and if your expenses start to go, say, over $250, $300 per month, okay, then that's time to get rid of it. But drive it till it dies, take that money and save it. Okay, now I did buy a car for my wife a few years back. It's been 7 years ago. We bought a new one. We got an interest rate of 3.99%. We did take it for 60 months, and after the 4th year, we just went ahead and paid it off. Now, in that case, I did go ahead and do a 60-month loan at 2.99% interest. They were giving the money away practically. So, but now that car is paid for. It's only got 23,000 miles on it. My wife hardly ever drives it, works out of the house. And so it's a paid for car, great shape, and we're not making any payments on new car. I could go out and pay cash for any car I wanted to. So it's not a matter of me not having the money, but I'm taking that money and putting it towards, say, my retirement. So I want to thank you for watching. If you have any comments on spending for cars, leave us your comments, even suggestions or things that have worked for you. Thanks for watching now.